following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Option Block. That rockin' theme means it's time once again for your bi-weekly source for options, wit, and wisdom, and on infrequent occasion, hilarity. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And I'm looking forward to a fun episode of the Option Block with my fellow all-star panelists today. Joining me on the panel directly to my left, and by my left, I mean all the way to the East Coast of the United States, none other than the Rock Lobster himself, good old Andrew Giovinazzi from OptionPit.com. Mr. G, the other G, I should say, welcome to the show.
Thank you, Mr. Longo. It's a pleasure to be here on a sunny day in Maine. Almost nice enough to go hit golf balls, but I'll be doing your show instead.
I think that's definitely a preferable choice. If hitting golf balls in the sunshine in Maine or doing the old Option Block, I know which way I would lean. Personally.
Nothing I would rather do better than to speak to your lovely listeners who are waiting for what's left of my wit and wisdom from 16 now it feels like 20 years of option trading. So,
and they are indeed a lovely bunch. We have a sexy group of listeners. I'm not sure if you've ever seen them.
They are much nicer than the bunch I started putting up a post for Market Watch once a week.
Oh, not a sexy bunch over there at all.
All the comments, my God.
Market Watch is many things, but sexy, perhaps not one of them. They don't hold a candle.
The comments were pretty awesome, I have to admit.
They don't hold a candle to our Option Block listeners. A sexy bunch, if ever there was one.
Absolutely.
Speaking of sexy, we are also joined on the old panel today by the man trying to take the place of Tim Navabi from a pure sex appeal perspective. Of course, you need to grow out that hair a little bit, Sean, so you can have that bouffant do that Tim used to have, which is, of course, good old Sean Fitzgerald holding down the Options Express hot seat today. Sean, welcome back to the show, sir.
Welcome back. I'm very much welcome to come back. I was not here last Thursday, my usual time slot, so I'm glad to come back after a week off. Not the most dramatic day on the indexes. Only up a couple of points on the S&P, down a little bit on the Dow. However, there was quite a bit of action on the OX desk. I'll be looking forward to talking about. And we had some great baseball games last night for all you baseball lovers, and we have some great games tonight as well. Sorry, Lobster, I know they don't play baseball in Maine, but I wanted to throw that out there. I think we'll have a lot of baseball watching going on this evening. I believe there were some noon and 3 p.m. games as well that I do not know the results Yeah,
we have
we'll talk about
plenty
that later in the show.
AA and AAA baseball in Maine.
Yeah, New England, not exactly the sports mecca. You got the Sox, you got the Pats, and then once you get into southern New England, you get a lot of Giants and New Yankees fans as well. And that's really
Pretty
about
much
it.
centers around Boston. All New England centers around Boston.
Yes,
you got the Vermonters, the New England, the New Hampshirers, the Mainers, the Massachusettsers, the Rhode Islanders. They're all sucked into the to the Boston orbit.
Ecosystem. It's funny. When I first met my wife, who's obviously a Chicagoan, and Chicago being very much a sports town with 3 professional teams, she couldn't believe that I came from a state, Connecticut, which had no professional teams to its name. We had the Whalers once upon a time, but that is long since gone. She couldn't believe I came from a state with no professional athletics teams, so I had to slowly walk her back off the ledge. But yes, not too much.
I came from California, so it's the same thing.
Yeah. Oh yeah, they had them. They keep getting them and losing them over there. That's a whole different story. All right, and listeners, we will be joined in a little bit by good old Uncle Mike T, Mr. Tusaw, as well, as you might imagine, given today's Apple activity. He's a wee bit busy over there in the land of KYO. And speaking of Apple, I think we'll just dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, where we talk about what was trading, what was moving the old markets today. And as Sean alluded to, wasn't a whole heck of a lot in the broad indices. In fact, Sean, this might be the 3rd consecutive appearance of yours where the indices, the S&P particularly, was literally closed unched on the day again. Another 0.0% move for the S&P today. So I think it has something to do with you, Sean. Whenever you're on the show, it's just a literally unched day in the S&Ps. I think you have that gravitational effect on the S&P.
I think on the days I'm doing the shows going further, I'm not going to look at the S&P, just assume that closed unched. And when I arrive at the show, if it's up or down 40, 30 points, I'll be surprised.
There you go. Just assume it, and then you'll be pleasantly surprised when there actually is some activity. It was about the same for the Dow and the NASDAQ today, both moving fractionally, but really closing not with any sort of significant movements whatsoever. Of course, from an index perspective, we did see a little bit of a drop-off in the old VIX. I'm not sure if you've ever heard of this index. I believe you call it VAX or VOX. I'm not sure how you pronounce it. But this VIX index did close down a little over 4% today to 15.6 on the day. So perhaps we'll start there. Did that surprise you a bit, Andrew? I mean, we've talked in the past, people not really being too reticent to take their VIX premium off the table going into weekends or anything like that. Looks like today they took their opportunity and ran with it. Again, just taking premium off the table anywhere they could.
I think so. I think Mark's phrase for this is people get fully hedged. They just buy a bunch of VIX juice and stay long. And then when the market kind of tanks, they don't have to do much. And I think that's kind of, sort of what we saw this week. I actually long some VXX put time spreads, mostly because just thinking out loud as far as, I don't think everything's as bad as they think. And generally, once earnings come out, volatility starts coming in. I mean, the sentiment for earnings have been pretty awful already baked into this. So I think there has been a lot of there has been much more expectation baked into some pretty ugly movement than we've seen so far. And if we're not going to get the movement, it's going to be hard for the VIX to maintain, that 16. It's hard for it to maintain 16 VIX when we're only moving around, 0.5% a day. I mean, close to close, realize we're pretty. It's getting pretty low. I expected it to come in a little bit. I think 13 will be the bounce spot until the fiscal cliff kind of ends, or Spain, they make kind of a final decision on just starting to some sort of a budgetary union. So I think we'll be bouncing around off that for a while. But anytime it just pops short term on nothing, for right now, these conditions currently, I think that's kind of a little like short-term sell. So,
it kind of puts the lie to the common refrain we've been hearing throughout the media and all the talking heads these days that vol is cheap, VIX is cheap, vol is cheap, VIX is cheap, and yet there still is that disparity to be captured between realized and implied, and we're seeing people going after it again today. So despite how quote-unquote cheap people may be calling the VIX at these levels, there still is some room to the downside, and there still is that implied versus realized premium to be scooped up by the Hale and Hardy out there.
Volatility risk premium is still rich in that. So yeah, it's again, I don't think it's a hugely long-term trade. I think the VIX has been slapping around between like 16 and 13 and a half or so. It's not much more than that, and we actually have to start moving again for it to climb. So I mean, when you start with that extra premium, gravity's on the downside until something changes. So
speaking of gravity on the downside, I'm very glad you're on the show today, Andrew, because some of the leading news this week involves one of your favorite names of yesteryear.
I actually took it off my watch list.
I love it.
It was my worst trade of the year, so it's officially, I have forgotten it like some bad girlfriend.
I think you can no longer hold that worst trade of the year title there, because I think the Zynga guys have you beat across the board here. Of course, we are talking about Zynga, that evil proprietor of things like Farmville and other fantastic time sucks. They, of course, IPO'd earlier this year. We talked about them a number of times on the show, have since been, I guess you can call them rather gradually, or perhaps maybe a little faster than gradually, moving to the downside. Closing today, $2.43. What an apocalyptic disaster this name has been. But what's interesting about this, for a couple of things, we talked, they of course were making a lot of news this week. We talked, it was a few months back now, when they acquired the Draw Something makers, essentially an app manufacturer. They essentially bought an iPhone app for, I forgot how many hundreds of millions of dollars, but many hundreds of millions of dollars. It was a typical type of behavior that we saw from companies back in the dot-com bubble, where they were flush post-IPO. They all of a sudden had this currency lying around they didn't have before. It was extremely valuable. Let's throw it around and buy stuff. So here you have a company just kind of getting its feet wet post-IPO, and they start gobbling things up, and they buy OMG Pop, who is an app manufacturer. They made essentially one big hit app, Draw Something. Zynga, in their infinite wisdom, this is why I say they have you definitely beat for the worst trade of the year, is they came in and scooped up OMG Pop at the exact height of the popularity of that app, when millions of people were using it online. And anyone who's ever been involved in any of the mobile app ecosystem, or has used or downloaded these things, they're very fickle, and they go in cycles, and these things are hot for a week or two, and then they go away. And that's exactly what happened to this Draw Something app. It was huge, and Zynga bought it right at the peak. It's kind of like Soros diving into tech around March of 2000, just lifting the offers on all these peak levels. And they today announced, or maybe it was yesterday, announced that they're taking a huge write-down on that deal. And that cracks me up, because they just closed that deal a few months ago. They just closed that acquisition not that long ago, and they're already taking a massive write-down. Can you just say that wrong-headed is probably, I think, charitable, to say the least. But that also
got flush with money, and they couldn't wait to waste it.
Yeah, apparently. That just shows, these guys probably shouldn't go public when they probably don't need it. And they had money coming in. They obviously raised a lot with the IPO, but of course it's just exposed all the flaws in their business model to the public now. And their company has just been torn to pieces as a result. And of course, even better, it kind of ties into everyone's other favorite name aside from Apple these days, which is Facebook. Facebook announced, or admitted, I should say, probably earlier, that the first 6 months of this year, 14% of their revenues came from Zynga. And so with Zynga warning to the downside, that doesn't exactly bode well for Facebook, which closed today up a little bit, up 11 cents, but still south of the 20 handle, which of course is well south of where it IPO'd as well. So interesting news, 1-2 punch on the mobile front. And I know you liked Zynga initially because you thought of it as a synthetic Facebook. Well, now it is coming out the other side. It is becoming a very real anchor, a very real albatross for Facebook, dragging them down the other way.
It was a great call, but the wrong direction. It was a proxy, all right, for Facebook.
It was a proxy for Facebook's misguided attempts. But yeah, interesting stuff here. So Zynga crushed. You really can't even talk about it in options terms anymore. It's a $2.40 stock. So options are relatively immaterial on this, unless you want to write the 2.5 puts for 12 cents. then maybe that floats your boat. I don't know, but that doesn't really float mine in this name. Or maybe you want to scoop up some upside. Maybe you're charitable here and you want to pick up the Nove 2 halves for 21 cents. I don't know, whichever way floats your boat on this one.
Well, while you're on this mobile front here, Mark, I think you also got to throw Groupon in the list. It's still, Groupon was up a little bit today, but give it some time. It'll be joining Zynga. They're a race to the pink sheets, and I think Zynga just took the lead today.
Don't let Grigas hear you saying that on the desk next year. He'll be quite flummoxed. You can
hear it loud and clear. I'm still a little unsure on Facebook. They may be able to turn things around, but Zynga, Groupon. Sorry, Lobster, about my Zynga comments. However, that and Groupon are just, if you look at just obviously you know where it's gone from, but they're both heading to the pink sheets, and Zynga's well in first place right now. But it will just take another couple bad moves by Groupon. Today they announced they may be getting into a similar open table type of operation where you can make reserve a table at a bar or a restaurant. They didn't get into the whole type of story, but Groupon's starting to looks like they're just throwing life preservers everywhere to keep themselves afloat. And I believe they'll be right next to Zynga soon. And give it another year, we'll be trading pink sheets, calling night for quotes because they.
Have you? Well, let's stay on the Facebook thing for a second then, because it is interesting. On the same week that they announced essentially they crossed the 1 billion user mark, I think that would be amazingly bullish for any company to have a billion of anything, and then to turn around on the other side and just show how completely dependent they are on some of these niche players like Zynga to drive revenue for them, and then B, how poor they are at monetizing those users. And it's interesting because the impression on the bulk of the users people have on Facebook is so negative. They think they're already just marketing them every which way from Sunday. I can't imagine how they're going to have to turn that up to 11 to really make money on those people. And then what is the impression going to be after that? It's going to be even worse. So I don't know. It's just interesting stuff. We've bashed Facebook a lot on the show. We've also bashed Apple. We do our fair share of bashing the overhyped names out there. Remember, Annie's mac and cheese was the buy of the century, at least when you're looking on that same IPO day as Facebook. But yeah, interesting stuff. Anyone calling up for Facebook or Zynga today there on the desk, Sean?
Did get some Zynga orders. Nothing on Facebook actually all week. Me personally, but I did get some, guys just throwing some shots out at Zynga to believe they're going to be bought out. Obviously, I can't comment on things like that since we're not a full service firm. However, I take the orders with a sigh and kind of keep my comments to myself. I mean, basically just actually got about 4 or 5 orders, buy me 10,000 shares of Zynga, at the, 220, 230 range, whatever it is. These individuals really are just buying buying Zynga because they believe they're going to be bought out.
Is it trading for less than cash yet? The cash they have on hand from the IPO? Has anybody checked that?
I don't know.
They raised some pretty good money, right?
Pulling up their fundamentals as we talk here.
The fundamentals. What do they probably raise? $500 million. Of course, Pincus cashed out on most of that.
Yeah, most of them got out right away. Market cap of about 1.8. It's saying right here. Yeah, it's just not looking too good any which way you cut it here on good old Zynga. Before we close up the old trading block, Sean, I'm sure something that did probably light up your tape today was corn. I know John's not here. He's usually our go-to corn man. But you getting a lot of orders on corn. Corn, of course, gapping up about 5% during the day here after the U.S. harvest forecasts got slashed across the board. So people lighting up your tape there for corn?
I did get one interesting, actually, corn spread. Not really any. I mean, there was clients calling. Obviously, once the report came out, but actually, I got a lot of calls about OJ as well today because OJ had quite a spike once that report came out at 7:30 Central Time this morning. But what I was getting today was a lot of spreads with corn, and mainly what a lot of clients were doing. A handful of clients were selling the Dees and buying the April of next year corn. So I found that rather interesting. There was a group of traders doing that. I don't know if these traders were part of a group that email each other or not, but they were buying the front month, selling the latter, and the latter being April of next year.
Sounds like a newsletter pick to me.
Possibly. These guys, I think I could say this on the air. I mean, a lot of our corn traders are farmers hedging their products. Some of these, I don't recall if they were or not, but so it could have been a newsletter. But I mean, this is like 4 or 5 trades in a row I did get regarding this. Besides numerous calls just asking what corn is at. You know, at one point it was very close to limit up today. I believe it almost breached it. But it was very interesting day.
Second limit up in within 3 weeks?
I believe it was last week was the other one, yeah.
Excuse me. So, yeah. Nice back spread. You just kind of sit and wait for it. I mean, we're buying along. I keep forgetting to buy my front month against my short back month, though, which is, I'm like, okay, I'll do it this time. It's just ridiculously stupid. But yes, it's been a mover.
Lots of love in corn. Corn, one of the only things lighting up the old tape, aside from Apple today. Of course, I was hoping to stall until good old Uncle Mike could make it on the show. Looks like he's delayed with some clients. Apparently, the clients are not loving the Apple downside today. Apple, of course, closing down about 13 handles or 2% to 628.10. And, you know, Andrew, you and I were talking before the show, and there used to be a very reliable trade in the marketplace here where you could come in and load up on Apple or do Apple verticals or whatever the case may be going into earnings. And you always had in the weeks leading up to earnings this extended run-up where you could really bank on that in most quarters. And it seems this quarter, at least, we are seeing the opposite. Apple is reliably to the downside most days. Is that coming as a bit of surprise to you? I know you guys loved that Apple upside trade for a while there.
Yeah, it worked well, and we actually tried it again today, and it faded. It was up a little tiny bit of money. It faded back to even, and then I closed it because mostly when Apple's been doing these reversals, it really doesn't. It just dies, you know. So yes, it used to be a good trade, but it is no longer a very good trade as far as I can tell. It's not doing it.
It used to have. Go ahead, John. Go ahead.
I think what might happen soon is you got a lot of people in Apple in the $300 range, $400 range. They got to have something in their head that says if this thing goes back down to $550 or somewhere like that, they're just going to start selling. And you may have, you know, a lot of people, like I said, built into the stock in the $350, $400 range that saw it go to $7. Now it's pulled back 75 points. You do got earnings coming up. This stock could sell off 100 points in 2 days. If you have just mass panic selling, people not wanting to lose their profits who are long from the $300 and $400 range. I actually had a client who I had a half-hour conversation with this about today, and he's very concerned that he may not be in front of his computer when if this thing happens up drop 50, 75 points in a matter of, an hour or two, just off mass panic selling.
Well, that's why sell call, buy put of the KYO variety, and they won't have to worry about that anymore.
Yeah, and you got Jim Cramer saying Apple's an investment, Google's a trade. I don't know if Apple's an investment any longer. Apple may have been an investment, but now I kind of agree with Andrew. I think it might have lost its luster as well.
I tend to heartily fade whatever comes out of Kramer's mouth, unless they're the words that Sebastian put there. Then, of course, I doubly fade them. But, I agree. I mean, we were talking about this on our Options Bootcamp show yesterday, which is very much an educational show for basic retail options traders. And we were walking through some of these scenarios, and we got to the different types of gap risk you experience versus working let's say, an equity limit buy order versus an option and buying a put in particular. And a lot of people don't realize that that's exactly what puts are for. If you're worried about gap risk, then a put can be a handy thing, particularly if you're financing it with a covered call and you have some underlying to wrap it all up with. It's a nice little bow. There's a reason why the KYO boys have been doing that for a long time. It's the reason why advisors and asset managers all over the country have been doing that for a long time. It's a good strategy where if you're away from, particularly for a lot of these retail guys who are away from their desks, they're working, they're doing their actual job all day long. They can't be there to scoop the dips in Apple or to hedge when there's a massive dip. That's what options are for, So that sort of thing, I think, would be a no-brainer. Is that what you're recommending to these clients here, Sean?
Well, obviously, I'm not in a position. We're not allowed to give recommendations. I point these different types of, strategies out that I hear of other clients using. I can use phrases like that. I can't say go out and buy a November $600 put then if you're worried about earnings. So, but what I do often is I notice other clients doing this who have also brought concern about and we do have clients who did purchase a couple hundred shares of Apple in the $300 range. Now they're afraid they're up over 100%. They don't want to lose it. I can't tell them to do this. However, what I'll do is reword it into some way. I'm noticing a lot of clients who are in a similar boat to you, possibly maybe buying November, December, early next year, 600, 575 puts, somewhere in that ballpark.
You can leg into that Nove 600, 650 risk reversal if you're one of those proverbial Apple underlying holders who's been long since 300 and you start getting nervous south of the 300 strike. You can pick up that Nove 600, 650 risk reversal for credit. About $2 credit right now. So there's that. That's I think a very attractive trade if you're one of these people who's very nervous right now about near-term downside and doesn't mind washing your hands of it in the 650 range. If you're like Uncle Mike and you were waiting for the 690 range, you might be a little bit more hesitant to put that on so tight. But I think he even rolled his down to 670. If he was on the show today, I could ask him where he's rolling right now. But I'm guessing even south of the 670 strike. In fact, I wouldn't be surprised if they're rolling down to 6.5 and just wash their hands of it at that level. But we'll have to wait till he comes on the show to find out. And in the meantime, we're going to close out the old trading block and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means it's time for the old Odd Block, where we dive into some of the interesting and or unusual activity that was lighting up the old options tape today. And we're going to kick things off, as we are often wont to do here on the old Odd Block, with a little, actually not so little, biotech name. This is Auxilium Pharma, ticker symbol AUXL. They closed today at $22.35, down about 27 cents or 1.25%. This is not so little name, actually, closing about $22.35, down about 1.25% today. From a volume perspective, not so much. They're trading about 600 contracts a day. They did a little over 2,000 today. And what's really been going on here on this Auxilium Pharmaceuticals is that throughout all of October and even through last month, they've kind of been seeing the lower end of some of their range. If you look here at their chart, they were trading as high as nearly 26 not too long ago, and they've since drifted down about 15 or so percent from those levels, nearly 20% from those levels. Looks like someone is banking that this specialty biopharmaceutical company that focuses on developing and marketing products to specialist audiences, whatever that means. Looks like someone is focusing on this company really getting a turnaround after having been beat down a little bit in the near term. They came in and gobbled up some substantial size for this name. We saw total of about 1,700 of the Nove 27.5s getting lifted on the offer today for about 25 cents. The first one was pretty much a big block of about 1,200, and we saw the rest kind of filtering in throughout the day, which that alone equates to about 3x ADV for this name. There was an open interest of 0 on this strike, so this is all opening paper. This is the guy, so obviously pushing up the ADV nearly 4x on the call side, and all of this stuff really looking for this stock to gap up. He lifted up a vol level of bumped it up only about 3%, which is surprising given the size of this trade in this little name, to about 45, almost 46% here on this Nove strike. So interesting stuff. Someone obviously betting on some very near-term upside. Of course, these levels are kind of intriguing because what he's paying here is substantially north of the highest that Auxil has traded, at least recently. We saw it trading above the 26 handle back in July. It hit 27 right around earnings, and actually it got a high of 29 at that time, but then never really looked back. So obviously this guy expecting this one to turn around and test the upper limit of that range again before Nove expiration. I'm assuming, Andrew and Sean, that you guys are not highly conversant in the trading wherewithals of Auxil.
I'm not, but I do notice there are earnings on the 5th, and that could be part of it, but usually a pharmaceutical stock is not heavily, you don't have a lot of option trading just based on earnings, so that may be part of the reason, but I haven't really dug into the stock yet, but there must be some kind of FDA approval on the rise from now until November expiration.
Yeah, that's what I don't trade it, but people are piling in like it is, so that would just have to be my pure speculative, and I did not trade that in a former life at any particular time, so.
Wow, one of the few, the proud, the non-traded by Andrew names.
Exactly.
That pretty much gets into the pink sheets at this point, doesn't it?
Somewhere, yeah.
Next up, we talked earlier about cheap, almost sub-optionable tech names, and we have another one here on the old odd block today. This is AMD, a former high flyer, a former big rival to Intel, of course, as the chip manufacturer. They've since really fallen by the wayside as Intel has eclipsed them in pretty much every conceivable way. AMD still survives really as kind of a economic player if you're looking to save money or if you're looking to get a lot of power per kilowatt and looking to conserve energy. AMD is a player in that market as well, servers and things like that. People are very power conscious. Needless to say, AMD up a little bit today, about 1.5%, closing though at $3.20. This stock is not exactly looking too good, but where it is right now, these levels are right around the 52-week low level, and apparently that combined perhaps with the fact that we have earnings next week on the 18th, which is earnings palooza day. Everybody's reporting on the 18th, it seems like. We saw someone really just diving in to light up the tape here on AMD. This name of late has been doing about 11,000 contracts a day, did nearly 80,000 today. A good chunk of those coming, pretty much all of them coming in upside calls, and a good chunk of them coming in the Jan upside. We saw the Jan 2013 $3 calls trading almost 23,000 times, and the fact that there is open interest of just a couple thousand contracts on this strike, this is all essentially opening paper. I'm looking here now, in a total on the day, we saw 23,000 going up, almost 23,000 at the time this was written up. By the time of the close of the session, we saw about 45,000 total on this strike. So an enormous influx of upside love here for AMD. Obviously, this is Jan, so it's not entirely an earnings play. It goes well beyond that. Also, someone looking here and taking a chance to spec some size, pick up some deltas in AMD. We joke about these cheap names being almost sub-optionable, but there still is a value in picking up, let's say, a Jan call for 50 cents versus buying the stock for $3. I don't know if that's perhaps my favorite trade of the day, but I could perhaps see some value. There is 20 cents of meat in there already, so you have some intrinsic value that you're buying.
There's some gamma in that trade.
Yeah.
There's you get a little extra bang for your buck there.
It's not like you're buying Jan 6s or something.
No, Jan 6s we would have to poo-poo that trade.
Our guy. Go ahead.
Very interesting trade with over almost 46,000 of the Jan 3s. You got only 1,500 of the October 3s, and you have earnings on the 18th, as you mentioned earlier, a day before October expiration. So I do find that very interesting. There must be some. This could be another. I did hear
the end of the year rally, right? You see, I think I'm seeing some more of those hit the tape. Some like the jam buyers, implied volatility is getting lower. People are looking for the gamma, buying the January, and kind of I think playing the end of the year rally with that type of trade, which I don't think is an awful. It's not an awful way to go.
This was an advisory play two today. I know I'm not sure the advisory, and if I did, I'm not sure I could say it on the air, but I know this was one advisory did recommend this trade today to quite a bit of trust.
That's what our unusual activity editor, Michael, who pulls a lot of this stuff for us and parses this during the day for us. And if you haven't checked out his stuff, by all means, I recommend you surf on over to the Options Insider. You can get into the nitty-gritty of all these different analyses he's doing for us. And he thought this was exactly the same thing. Looking at the numbers flittering in, a handful here, 10 lots, 100 lot, 500 lot, it certainly seemed like it was newsletter rec NASDAQ or something like that, you see these kind of trades go up just like this. They start filtering in based on someone's auto trade recommendation or whatever the case may be. Certainly someone with some followers here, because 45,000, nothing to sneeze at. Of course, this is a very inconsequentially priced name, but still, these options are not terribly cheap, trading for around 50 cents. So that's someone with some teeth, I would say, in the newsletter game, the auto trading game, as you will. So I don't know. I mean, on the merits of it alone, I don't know how I feel about this one. This really, I don't know where I see the bright spot coming for AMD anywhere in the near term. I could see from an implied vol perspective, it's not bad. This is a little meaty, I think, for a $3 name rolling out to Jan. I mean, like I said, it's got 20 cents worth of juice in it, so there is some meat on those bones. But still, I don't know where AMD is really making the inroads over the next few months that are going to make this trade pay off. It's really just had its hat handed to it by Intel, and it really is now very much a niche player. Perhaps they have some new ultra-low power chip coming out over the next few months that's going to boost them in some way. But
because you need to see $4 on that underlying really to make it worth it.
Yeah, exactly.
50 cents you're spending on those.
You need that.
I mean, you had a $6 stock here in June, and it's taken been cut in half since then. And I mean, do we go lower from here? Was up 5 cents today. I don't know, but I kind of agree. You definitely need at least $4, Andrew.
I would like some people actually trying to leg into some verticals instead of maybe with this, maybe the 3-4. It looks like, judging by this paper, someone did the 3/2 a little bit, about 3,000 of those went up, but that was really about it. You'd think with a big size trade like this, you'd either see the market makers or some savvy retail guys legging into verticals off of this instead, and we didn't see much of that paper going up. Everyone just kind of following the herd onto these Jan 3s. So we'll keep an eye on this one too. We'll see. I think in a week we'll have a good idea whether or not these calls are going to pay off when they announce their earnings next Thursday. That'll be a fun show next Thursday because everyone's coming out after the bell. So we'll have a lot to parse in real-time turns. And then last up here on the old odd block, we have we have someone who's utilizing one of my favorite strategies. Long-time listeners to the show know I'm a big fan of the risk reversal, bullish, bearish, whichever way you want to go. It's like someone was lighting up the tape with a risk reversal here on Plains Exploration and Production Company, ticker symbol PXP. This is an independent energy company, again, engaged in the upstream oil and gas business. This name closed today up about 2.5% to close a little bit north of $37. And from an options perspective, they actually do some respectable numbers. They've been doing about 6,000 contracts a day of late. They did over 31,000 today, and the bulk of this came, like I said, in a pretty substantial risk reversal out in May. We saw the May 30-40 risk reversal, a bullish risk reversal, so he sold put, bought call, traded over 10,000 times, so a total of nearly 21,000 contracts going up in this one trade. We saw the 30 put sold for about $2.05, right around the bid. He wasn't hitting the bid, and then he lifted the offer on the 30 calls for $3.40, netting out to $1.35, and with open interest on both of these strikes of essentially 0 and 82 contracts, this is all new opening paper. And let's just see if there's any more have gone up since we put this up on the site. Of course, we do these real time, and then sometimes these numbers change by the time we get to here on the show, or a few hours after the close or so. Yeah, it looks like these numbers are about the same, about 10,000 total on the day. I can see what the rest looks like. The rest of the paper was just front month. We saw the OC37s, OC38s, and OC39s all go up around 2,000 times as well, rounding out the meat of that 30,000 contracts today. There are earnings on the first. Of course, this is a May trade, so I don't think he's really looking to game earnings unless he liked the term structure out here, liked the vol in May a little bit more than some of the other months. But still an interesting one. I don't know if you guys watch another little one here on the odd block today. Any of you guys follow PXP at all?
I think I've got this. I do in a IRA, the stock, but I don't trade the options on it.
Yeah, well, there you go. So you're familiar. Maybe this is you lifting up this 10,000 lot risk reversal here. It's been
a good, all these little natural gas and exploration companies. I mean, they've been. You don't hear about it much. It's funny you haven't heard about in the debates yet, but I mean, there's definitely There is growth and growing jobs in oil and gas recovery in this country now. It's growing hugely. So I like this. The plays on all these little exploration companies in general. They're making dough over $70 a barrel. They'll keep trying to find more.
Yeah, when they hit those magic price points, oil becomes a much more profitable thing to produce. Funny that.
This may be a Romney play. Now that I look at this company a little closer, they have a lot of properties in Los Angeles, Santa Maria. Looks like they got some in the Rocky Mountains, West Texas,
Romney
New
play.
Mexico. Obviously, Romney claims he's going to be drilling in multiple other states. This company's got oil properties. Looks in like 6 or 7 different states, up in the mountains in Gulf of Mexico. This could be a Romney play. I'm just throwing that out there.
Like that though, the Romney play.
And not a bad trade. I mean, he paid a little bit for this upside, but not bad overall. We're big fans here of the old bullish risk reversal on the old odd block. So anytime someone's using them to great effect versus just lifting the offer on some upside calls, I think we're going to champion it for the most part. All right, and with that, we're going to close out the old odd block and dive right into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, you know the drill by now. You know what the Express block is for. So I shall just get out of the way and let Sean hold down the old OX hot seat. Sean, what caught your eye today over in the land known as OX?
Not like the last couple weeks where I'm getting a lot of, different credit spreads, different debit spreads. I was getting a lot of different, just I'm going long these calls or I'm going long these puts. And obviously the news this morning with Sprint possibly being bought out by Japanese SoftBank, I believe they're called, Japanese carrier. Meaning that stock was trading 6+ in the pre-market. So I got an order early this morning on the no 6 calls. It took 1,000 contracts for most of them done at 41 cents and trimmed them up at 42 cents. So a client believing this rumor is definitely going to happen sometime soon. Staying with the wireless carrier and moving into a stock that's always in talks with Sprint, PCS, which is Metro PCS Communications. Obviously, this is on the other side. This client was a premium seller. Stock closing today around 11.64. I sold 500 of the $13 calls in the same month that I bought the Sprint, November, for 30-cent premium. So different wireless clients, one being bullish on the Sprint rumor, and another one selling the PCS premium calls. Moving on to some earnings plays into tomorrow. These are straight up earnings plays without a doubt. We do have Wells Fargo reporting in the morning tomorrow, and we had some trades on the October 34 calls. Bought 500 of those at $1.60. I believe Wells Fargo closed in the 35 plus range today. It's exactly
35.18.
35.18. So I had a client buy 500, 34 calls at $1.60, and also to be safe, he went in and bought 335 puts at 50 cents. So I was wondering why he wasn't doing an actual straddle, but he decided to just go long to 34 calls, a little deeper in the money, and take the 35 puts 300 times at 50 cents.
That's almost a gut strangle. You don't see too many of those going up these days.
No, I found that very interesting. The odd thing was, he gave me a call. We did the 34 calls, and he calls me back 5 minutes later and wants to throw on the puts. So I don't know if he had a change of heart, called somebody or what, but he put on a little bit of hedge against his immediate first trade, which was just buying 500 of 34 calls at $1.60.
The icy finger of doubt crept up his spine.
And then going on, sticking with Wells Fargo, quite a few straddles today going into the earnings tomorrow. On the OC 35s, paying paying 110 for 200 times, and on the November $35 Wells Fargo straddle, same quantity, 200 times for, I think it was about 211 on that. So a lot of play in Wells Fargo, and also, like as you were speaking earlier, I did get quite a bit of calls on those AMD Jan $3 calls, 3 different trades, 1,500 contracts at a pop, in the 51 to 52 cent range. So that's why I do believe it was some kind of advisory service. One of the trades was from a client who does not participate in advisory because he always has his own opinions and he stresses them very proudly. But overall today, very close to about 5,000 myself out of those total 46,000 traded on my desk personally. And that's pretty much what we did on the desk today in the OX land. Tomorrow, I think will be set up by the vice president debate tonight. May have a little bit to do with the futures as they whip around this evening. But more than anything, we not only have Wells Fargo tomorrow morning, we have J.P. Morgan. So whether or not those are going to be some big hitters or disappointers, that can set the stage for the close of the week tomorrow.
All right, thank you for that, Sean. Some interesting stuff. Don't see too many OX guys coming in to buy some size straddles going into earnings. We'll have to keep an eye on Wells Fargo and see how that performs for them. I think with that, we're going to close out the Old Express block and dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what's on our collective horizons for the coming weekend. And before we dive into that, listeners, we are indeed finally joined by the man, the myth, the legend, good old Uncle Mike Tusaw, all the way from KYO land in St. Charles, Illinois. Uncle Mike, I'm glad you could finally join us, sir.
Yeah, gotta do what you gotta do. I was busy wiping tears away with watching Apple today.
Yes, so. I could imagine. Well, since we got you on, we missed our little Apple discussion. But what was your takeaway from today's movement? And have you rolled down from 670, let's say, to 6.5, or what's your take on what's going on here?
Tomorrow I'll be doing a roll tomorrow at some point. I just kind of want to. Not sure if I'm going to do October or November. I want to see what tomorrow's action is. I think that tonight's right now, since our put's at 620 and the put's pretty much fully financed right now because of the call rolls that we've been doing. So right now, if we go up to 670, great, that would be fine. But I don't really see that happening. But I'm going to see what the choices are tomorrow after the debates tonight but it's very likely that I will do some type of a roll in some way, shape, or form tomorrow from the 670s.
We were just talking before. It looks like you can get the Nove 600 6.5 bearish risk reversal, or in your case, the old collar on for about a $2 credit even these days. So that might, if you're leaning south of 670, that might be attractive to you. If you're still hovering around 670 or north, then perhaps not. But an intriguing one that just kind of helps you take advantage of all the Apple zealots, keeping that call juice alive, regardless of what happens here in Apple.
Yeah, that's for sure.
You can always leg into verticals, leg into bullish risk reversals here, or other types. And as long as you have that short call upside component, you're going to fare well from a premium perspective. So tomorrow is a big day for the Apple roll then.
Tomorrow is Apple roll day. Call me Applejack.
So aside from that, what else was catching your eye, and what are you watching going into the rest of the week into the weekend?
Ford had a nice pop today. Definitely liked that. GLD and SLV are just kind of still sitting there right now, and we're short the 171 puts on GLD. We're hedged at the 161 level right now for October. So that's one of those ones where the underlying's gone, the magic of options to where the underlying's gone against us, and the time premium is actually making that into a pretty decent trade. That happens every time with credit spreads, right? Because they're paying you to get into the spread. Is that right, Andrew?
That's how it works.
Every time. Correct. Every single time is a winner. Every time.
Because you get paid on them every time. Holy cow. Now, if anyone out there, the listeners, believes that, I also have some oceanfront property in Arizona to sell you too. But yeah, it's been going pretty well, and we're flattening out in the metals, and I'm just going to continue to sell premium. I'd like to get it put to me at some point, but in the meantime, we're taking in some decent premium month in, month out in these metals, but I keep trying to get back in through the short puts, but it won't let me. I keep trying to get out of Apple and into the metals. It's like the hardest thing.
They won't let you buy Apple, or they won't let you buy metals. They won't let you sell Apple. You're stuck. They keep pulling you back in. I kind of agree with you on Ford. I kind of been sitting on my hands on Ford. I'm not sure really what I want to do with it here. I'm not too enthused to put on protection at these levels. I'm not too enthused to write premium at these levels. The premium isn't exactly too attractive. So I've kind of just been sitting on what I have here. I haven't really had a chance to sit down and parse out what I'm going to do with Ford going forward. But it is an interesting one, kind of languishing around the 10 handle for the time being. So I guess if you're writing premium, it has been working out fairly well for the most part. But an interesting one. But yeah, again, not exactly a terribly lucrative or attractive trade right now. So I've kind of just been sitting on my hands on that one. Waiting and see if I can get a direction out of it first before I decide what I want to do with it. Andrew, what are you watching here? What's catching your eye for the rest of the week?
Actually, we've been trying to find a good trade for metals too. I've been looking at like some out of the money butterflies for gold. They're just cheap. They're not moving very much. I wanted to buy some back month premium in some of those, but it keeps going down. So I'm sort of waiting. And just a couple small short vol trades, and it's funny. It's sort of like everything is sort of some sort of a time spread. Kind of, let's say, long some premium in the FXE and just shorting some front month stuff like that. So, I just think realized volatility seems to be very cheap. So nothing's really feels like it's moving. So it's hard for me to own any front month, any October options really. So actually, I don't think I'm even long an October option.
You degenerate juice buyer, and you have no options.
No, I'm not long a one. Not a one that I can see. How is that possible? How is possible the Dow is down 300 points and the VIX be down? How is that possible?
Oh.
Because you don't look at the skew, you boneheads.
Listeners, that's some inter show chat we have going on. Obviously, that's some questions people have been throwing in over to all of us. I think all of us have received a variation on that question in one way, shape, or form over the years.
The market makers manipulate it. That's why.
Yes.
Well, it's not that they manipulate it. They just, they price the downside skew has been priced very steeply. And, you have to be careful on how you buy or sell the VIX, which actually Mark and I spend no small amount of time doing on our pit reports every day. You just don't buy or sell it. You have to take how steep the skew is in the index into account. That changes the types of trades you put on to give yourself the sort of basically the right kind of gamma going into, any kind of VIX move. So it's you know what it is? It's an educational thing. A lot of clients do things and they're uneducated about how they work. And the worst part is they're right on direction. They're just wrong on the trade execution, which is, of course, what Option Pit was founded to fix. So.
And Sean, what's catching your eye for the rest of the week here? Obviously, you mentioned the VP debates, and you mentioned some of the other things you're watching, like Wells Fargo. Is that pretty much what's taking your attention for the rest of the week into the weekend?
Well, yeah, I think that. Then we do got the Michigan sentiment tomorrow morning. Sometimes market a mover, sometimes not. But besides the VP debate and the two big financials reporting tomorrow, J.P. Morgan and Wells Fargo, that pretty much wraps it up for my week. Monday morning, I'll be looking forward to retail sales.
Yeah, and it should be a fun one next week because we kind of kick off earnings season in earnest next week. We actually have some big names coming out, and on the 18th next week is when it really picks up. Of course, we have Citi on the 15th, Bank of America on the 17th, but on the 18th is the big earnings palooza day. We have Southwest Airlines, we have good old Nokia. Talk about another little one. Almost sub-optionable name, $2.55 right now. See what kind of paper is lighting up Nokia these days. Microsoft, of course, always an interesting one to watch. They traditionally have been a bit of a resounding meh post earnings, but of late they've actually had some movement, so it might be an interesting one to play. Verizon, AMD, we just talked about, and of course Goog, all lighting up the tape on 18th. I'm sure there's some other ones I haven't included in here, but the 18th, next Thursday, a week from today, will be a fun show. We'll be diving into a lot of interesting real-time earnings analyses, so stay tuned for that. But unfortunately, that is going to do it for the Around the Block segment and also for this episode of the Option Block. But before we go, I like to check in with all of my cohorts here on the old All-Star panel to see what they have in store for us coming up in the coming week. So Uncle Mike, we'll start with you. How is that webinar train rolling along? How did it go with Price this week, and what do you have in store for next week?
Oh, pretty good. He had a lot of very positive response from a lot of people, and it was it's always good to hear different guest speakers on there, to hear a different take on things instead of me flapping my gums all the time. But yeah, it went well. This Tuesday night, we're going to have Kevin Davitt. He is a futures broker that works in the same office as us, and he's going to talk to the audience about futures options, and we're excited about that because a lot of our mailing list, a lot of our clients are very, very well versed in the equity option world, and there's like a disconnect between the equity options and the futures options, and we haven't gotten it through compliance yet. But what we're talking about titling the webinar is it's the same frickin' thing, but different. So, that's what we're looking to do right now, and then just in the coming weeks, we're excited about the webinars in general. We're gonna hopefully get the Seabass man on again in the near future, and we're still working on the schedule, but just got a lot of irons in the fire right now. But right now, the show must go on and will go on with the webinar train. I'm committed to that. So that's one that I've just made second priority after, of course, watching client accounts, because we are going to get the webinars going.
All right, and Sean, I know we kind of skipped over the mail block today, but we did have a question that kind of related to you guys, and it sounds like it's pretty timely, so I'll just throw it to you really quick here. It was an email from Ted Sass, and he writes, how does PM work, of course, portfolio margining? How does that work at Options Express? Do you automatically receive it if you deposit $100K or more, or do you have to do something extra to qualify for portfolio margining? So, Sean, I hear you guys have something coming up that may address this very topic.
Yeah, it's a great question and great timing with how we always like to end the shows of what webinars each one of our companies are coming up with. So Ted Sass, basically how portfolio margining works at Options Express is, no, you don't automatically just get it when your account exceeds $100,000, but it's not very painful process. All you really need to do is ask. We send you I believe 1.5-page application. You complete it. And really all you need to do is just have 3 years of option trading experience, be a level 5 trader, which usually you would be if you have $100,000 and I'm going to be trading. Once you have $100,000, all you really need to do is ask us. We'll then send you a 1-page application. You simply need to have 3 years of option trading experience. Your investment objective needs to be speculative, and you need to have a trading level of 5, which normally you would if you're going to be interested in portfolio margin anyways. So simply, if you are an Options Express client, do have $100,000 interested in trading portfolio margin, I ask you to do one of two things. First, request to have portfolio margin, and a little bit more about it. On the 16th of October, so next Tuesday, we do have a webinar at 9:30 Eastern Time. So well after the trading hours, well after the TV shows are over, you can sit down and learn for an hour, a little bit understanding how portfolio margin works, not just in general, but how we work here at Options Express with it. So again, that webinar is Tuesday the 16th at 9:30 Eastern Time, 8:30 Central. You can sign up for free at optionsexpress.com in the Events Center underneath webinars. That wraps it up for the Options Express today.
All right. Thank you for that, Sean. A very timely question and a very important one, too, portfolio margin. People, I don't think they realize how valuable it is till they actually get it and they see what it can do for them. And it becomes makes options trading a much more sensible thing, I think, for a lot of people once they see how portfolio margin actually works. And last but certainly not least, Andrew, you told us a little bit about what's coming up at the pit. Is that everything, or is there more lurking in the land of OP?
A little bit more.
By the way, has Ocean Pacific sued you guys yet?
You know, it's funny. I think that name is coming back. OPs, those corduroy shorts.
Really? They're back? It's kind of like members only. I thought they were just dead and gone.
No,
Naughty by nature, OPP.
There you go. We early bird special, registered now. I'm reading it right from the email I got. The SIBO, Option Pit, and the Street are doing a seminar in Chicago Saturday, November 10th from 8 a.m. to 5 p.m. And it'll be Jim Bittman from the Options Institute, Jill Malandrino from the Street, Mark Sebastian. We'll be getting together and start teaching people about volatility and how it can help you kind of optimize your trading direction. So
I saw that. That's a mega webinar, 8 till 5 p.m. I know Mark likes to talk, but hopefully Jim and Jill will be able to carry some of the weight too, because that's a lot of time to talk.
Jim likes to talk too. That's plenty of talking going.
That's some serious talking. 8 till 5. Hopefully he has some nice beverages set aside.
It's going to be a pretty deep. They'll hit those topics. I'm going to say in the deep dive fashion. Check it out, register. There was a special. Maybe you can get another one. If you sign up for our gold course today, Mark would actually include the registration for that event in the gold course, but you would have to be doing this quite quickly today.
Yeah, this goes out tomorrow morning, so I'm guessing unless you renew it for Friday. Hey, you can always contact the guys over at Option Pit and tell them you heard this on the show and see if they'll make an exception for it. I have a feeling they will. So contact Andrew, put Rock Lobster in the subject line, and say Andrew, is that deal still available? Why don't you want to give your contact information out there so they can get a hold of you, or should they just do info@optionpit.com?
No, it's Andrew@optionpit.com.
There you go.
Andrew@optionpit.com.
See, he gives you his personal email, and he really wants you to email him at like 2 or 3 in the morning Eastern time. That works best for him. That's when he does his best work. So by all means, even call him at that time. Yes, call him.
I'm writing coursework and doing research, and I don't think I sleep anymore.
What fun is sleeping? You can sleep when you're dead, sir.
You don't get it done.
All right, thank you for that. And of course, speaking of webinars, if you missed my rare off-network appearance here at the Old Money Show last week in Chicago, you can still get that on our website here, talking about the top 5 mistakes of options traders. I like to trot that one out every now and then. It's a pretty fun webinar. We hit on some interesting stuff. I was able to squeeze it all in a pretty short amount of time this time, so it was kind of fun to run through all those highlights and see what the reactions are from the crowd. A pretty sizable crowd. I was surprised, given the Money Show typically doesn't lean itself towards options. That's more of the Traders Expo type of thing, but I was surprised at the interest we've seen. Of course, we'll have that link up on the website. You can watch the webcast of it if you want to check that out yourself. Pretty fun stuff, if I do say so myself. Once in a while, I get dragged off the old network to do some off-network appearances, and they're fun whenever I get the chance to do those. So with that, I encourage you to surf on over to theoptionsinsider.com if you want to join some of our fellow people who sent us questions. We didn't have time for the mail block today, but you can by all means comment on theoptionsinsider.com. You can post comments on articles, send us tweets at Options. You can find us on Facebook at Options Insider, or of course just shoot us an email, questions at theoptionsinsider.com. Just put option block question in the subject line so we know which show you're referring to. And that's going to do it for this week of option block shows, but we'll see you again next week with a whole lot more earnings and a lot of fun stuff to talk about. So we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.